encourage mass violence.
Well, stuck out to, yeah, I mean, listen, you had the Aurora shooting and the guy was, you know, I mean, so there's a thing there.
Yeah, well, and it's a very violent movie.
Clearly did not affect the opening.
This is the story of the day, if you ask me. Okay, so you know how the kids were doing the Tide Pods, consuming them, and they had to do the warnings and say, don't do that. So imagine the beautiful Tide Pod, except that instead of detergent inside, it's got booze. That's the product Scottish whiskey maker Glenlivet wants to introduce to the market. Glenlivet's whiskey capsules are made from a seaweed extract. They're roughly the size and shape of Tide Pods. Tide would probably like us to say detergent pods. And to consume them, you just, pop them in your mouth and then feel the gush of booze swirling through your teeth and tongue. Each capsule comes packed with roughly an ounce of whiskey cocktail. They come in 3 flavors: citrus, wood, and spice. I have no idea is that one finger? Is that one finger of whiskey in a? Oh, it looks delicious.
How many pods did you have there, Clancy? I mean, can you see a situation where people maybe just like start popping a lot of pods?
Hey.
And then, so I'm told that these edible pot, right?
Right.
People eat a bunch. It's not doing anything. It's not doing anything. Then next thing you know, they're under the, sleep, sucking their thumb like paranoid. Can you see the same thing happening?
Can you imagine?
Where you're not realizing how much you're taking in?
The places that you could sneak these into?
Well, you and then they pop, and then all of a sudden, what's that down your leg? That's whiskey. It's just whiskey.
We digress. Apple Watches can either...
It's just whiskey. I swear it's whiskey.
Apple Watches can either make your life easier or result in massive fines. The NFL hit Steelers quarterback Ben Roethlisberger with a $5,000 fine because here he is, poor guy, recovering from an injury, back in the game kind of, he's on the sidelines, but he was wearing an Apple Watch. And the league has a rule that bars players from wearing any electric device that can transmit messages. Roethlisberger says he didn't know he was violating a rule. He wasn't given advance notice. And also, he wasn't even playing in the game. He's been sidelined since he had elbow surgery. He's currently appealing the fine. My question is, don't these refs have something better to do? Don't they have something on the field of play to watch?
I don't think that's the refs doing the fines. I think it's like some NFL guy with a camera is like, what's that? We got an Apple Watch. Remember, they use Microsoft Surface tablets. Microsoft's got a huge sponsorship deal with the NFL.
Oh, and therein lies...
No, everything it says Microsoft Surface. I mean, so you got Microsoft as a huge NFL sponsor.
Apple?
So Big Ben, Miami University's, not University of Miami, finest player to come out of the Red Hawks, makes $22 million this year. So the $5,000...
I know, but it's the principle of the matter.
The $5,000 is just a whiskey pod in his pocket, basically.
Got it.
Contestant, thank you. All right, on deck, Masayoshi Son, the billionaire SoftBank CEO, telling a Japanese magazine he is embarrassed and flustered. I'll tell you why next. And then later today, changing the world on commissions and investing. Do not miss Charles Schwab on the halftime report. We mean the actual guy, Charles Schwab, the man, on halftime. We're back after this.
Everything you touch, everything you...
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. And make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
The nights have started to draw in. And at DFS, we know that can only mean one thing. Everyone will want to spend more time at home, getting nice and cozy. Ah, you can't beat it. That's why all our sofas are handmade to order, and many are guaranteed to be delivered in time for Christmas. So you can look forward to cozying up this winter. knowing your new sofa won't let you down. DFS.
Bounce back. The message of the markets to early traders. And an eye on upcoming China trade talks. Squawk on the Street, 9 a.m. Eastern today.
There's always going to be this human hunger for communal activity. People aren't going to chain themselves to the couch. They're going to want to see things in a way they can't see them at home. The explosion of content means it's harder to stand out. We have new generations of lenses and cameras. We're looking at alternative content, concerts or sports. We've proven that for all the divides, there are forms of entertainment that can unite the world. This is the future of business. I watch CNBC.
All right, good morning. Welcome back. Dow futures, they're down 144 points right now. Time for your executive recap, the headlines you need in 60 seconds. Let's do this. The UAW says the union's labor talks with General Motors have taken a turn for the worse. The union's vice president calls the automaker's latest proposal inadequate. In response, GM says it is committed to continuing discussions around the clock. HSBC reportedly planning to cut up to 10,000 jobs, or more than 4% of its global workforce. Financial Times says the bank's interim CEO is looking to slash costs across the company. And SoftBank CEO Masayoshi Son says he is, quote, embarrassed and flustered by his recent track record. In an interview with the Nikkei Business magazine, he says, quote, when I look at the growth of U.S. and Chinese companies, I feel strongly it is not good enough. SoftBank is, of course, the largest outside investor in WeWork. Last week, Reuters reported the Japanese firm is struggling to attract investment to a second giant fund amid troubles with WeWork and other investments. All right, now back to the broader markets. Futures, they are pointing to losses again at the open. All this as investors gear up for earnings season, which is about to officially kick off. And check out this number. Consensus calls for a 4% drop in third quarter profits. If true, that would mark the biggest yearly decline in profits in 3 years. Analysts have recently lowered their estimates for all 11 sectors. But is that reason to avoid the S&P 500 and stocks in general right now? Joining us, Phil Orlando, Federated Investors Chief Equity Market Strategist, and Joe Borsuelas, RSM U.S. Chief Economist. Phil and Joe, thank you for coming in.
Thanks for having us.
All right, so if they're Phil, if they're lowering estimates on all 11 sectors, why is there any reason to own equities?
Well, this is exactly what we saw in the first quarter and the second quarter. The consensus expectations were negative year-over-year earnings. And guess what? We reported positive numbers. And I think
the analysts got it wrong.
Well, to some degree, the company management sort of lower the bar by sort of sandbagging the analysts. They bring the numbers down, then they are able to manufacture a positive surprise. And I think we're looking at a similar situation in the third quarter, likely the fourth quarter as well.
I can't figure out the economy, Joe. I mean, I tweeted out a story from Roanoke, Virginia, down near Blacksburg, and they can't find bus drivers. They're offering $20 an hour and $2,500 signing bonus. There's a grocery store that they just built near my house in New Jersey, $15 an hour plus bonus to start. I see those signs everywhere. Now, maybe we have recency bias or geographical bias. How do you see the economy? Is it really slowing?
Yes, it is. We're slowing back the trend right around 1.8% because the economy is absorbing two supply shocks at the same time, both driven by policy. One obviously is trade. We spent a lot of time talking about that. The other is immigration. I don't think we spend nearly enough time talking about how tighter immigration has led to tighter labor markets, and we are seeing a little bit of bottlenecks begin to be developed, develop, as you say, around different regions in the economy. And I think that's what you're seeing, and it's what you're hearing.
7.5 million open jobs right now, Joe.
Yeah, not enough.
You think we need to bring in more workers? Because obviously we don't have them.
We don't.
If we have them, they don't have the skills, or they're in the wrong physical location for the job.
We don't have enough willing and available workers at this point. Look, we got a really good business in Toronto. You know what Toronto is? It's the number one startup capital in North America. You know why? Immigration policy.
Yeah, they've
that
changed.
Shouldn't be happening. That should be happening here.
Yeah, go Canada. Phil, when we look at equities, though, going back to the markets, I mean, if the economy is going back to trend, to Joe's point, at 1.8%, we've had this 10-year bull run. I mean, is it harder and harder to make the longer-term bull case? Or have companies gotten leaner and compressed their stocks, taken out stocks through buybacks?
All of that's happened. And as we talked about the last time I was on the show, we thought that there would be some consolidation in the markets in August and September and October. To some degree, that's happening. But if we're not going into a recession, and our call is still that there's no risk of recession probably until the first half of 2021, then we'll get through this. And if we can get some positive news on trade, I think that potentially would be a catalyst over the course of calendar 2020.
Would it matter anymore? I mean, the markets seem to be moving less on trade headlines. Although today we're down 150 because apparently the two sides, China said, well, we're not going to give you what you want. We'll meet, but we're not going to give it to you.
Economic news is clearly the most important. And the beginning of last week, the ISM manufacturing and service data was very poor. That sent the market lower. The pressure from negative Chinese trade issues, I think it's what's creating the pressure on the economy. So if you can make some progress on that, then potentially you're looking at better economic news next year.
Is there any indication, Joe, that tariffs, and we've done stories, I know there's individual businesses that are getting whacked. We get that. I'm not minimizing tariffs. But is there any indication that tariffs have taken down the economy as a whole?
No, but that was the proximate cause of the slowdown. And then also, you guys did a great piece earlier on GM. 2 billion hit a month, 48,000 workers. You'll see that in the initial jobless claims now, and in next month's monthly employment report, that's going to be the big story.
Do we ignore next month's monthly payroll number because of the GM strike?
Well, we're going to hang a pretty big asterisk on that.
Yeah, not to steal anything away from our future coverage, by the way.
Yeah, right, yeah, exactly.
We've also got a big slowdown, Phil, in the energy markets. We tied, sort of the slowdown in new oil and gas drilling with industrial production, right? I mean, it's not like it was 10 years ago. You can't equate oil and gas now to 10 years ago because it's double the size. It's massively important. What's it going to take for the next leg up for equities? A turn in energy stocks, perhaps?
Well, certainly stronger economic growth, because I think one of the pressures here, separate and apart from the Iran-Saudi Arabia issues, is the perceived lack or reduction in global demand for oil and gas. So unless and until you get that pickup in demand, that's what's going to drive, in terms of supply-demand balance, the price of crude higher. So if we're looking for negative corporate earnings in the third quarter, and that's the forecast, the expectation for growth being slower because of the ISM data we saw last week, we need to get stronger growth in order to get those prices higher.
Yeah, we do. And remember, just to note that the energy industry is twice as big as it was now than 10 years ago. Yep. And a lot of people talking about changing it. We'll see what happens. Phil and Joe, great stuff. Have a great week, gentlemen.
Thanks.
We'll see you again. Time for your morning RBI. And since it's just about 6 a.m., we're probably hungry. So let's talk breakfast and making money. Today is the 4th birthday of McDonald's offering all-day breakfast. You want a McMuffin at 3 in the afternoon? You got it. What a gift. But this birthday has been a gift to McDonald's investors more than anybody else. When Mickey D's announced this plan, the stock trading right around $103. Now, it's at $211. That, my friends, is what they call a double. And the return for McDonald's investors, just about double that of the Dow in the 4 years. Never underestimate the financial power of bacon. Random but interesting. We'll see you tomorrow. Squawk Box begins right now.
Good morning. Stock futures are under pressure after that big day, though, on Friday. We'll tell you why China trade headlines are most likely to blame. Violence in Hong Kong as masked protesters defy an emergency order, the latest from a city in crisis. Plus, trouble in Detroit. The GM worker strike enters its 4th week with no end in sight. It's Monday, October 7, 2019, and Squawk Box begins right now.
Don't listen to a word I say. The screens all sound the same.
Live from New York, where business never sleeps, this is Squawk Box.
Good morning. Welcome to Squawk Box right here on CNBC. We're live at the NASDAQ market site in Times Square. I'm Andrew Ross Sorkin along with Joe Kernan and Melissa Lee, who's hanging out with us this morning. Thank you for being here. Becky's off today. Take a look at U.S. equity futures at this hour. As Joe said, things are looking like they are going to open in the red right now. Concerns over China trade, a big part of this. Dow off about 132 points right about now. S&P 500 would open down about 15 points. The NASDAQ looking to open down about 40 points. Let's also show you Treasury yields at this hour. When you look at the 10-year note, what you're looking at there is 1.522. The 2-year note down at 1.395. I still always like to look at the distinction.
Absolutely. One potential drag in the markets this morning, Chinese officials are reportedly growing hesitant to pursue a broad trade deal with the United States as talks are set to resume this week. Vice Premier Liu He, who will lead negotiations for China, is telling dignitaries his offer to the U.S. will not include commitments on reforming China's industrial policy or government subsidies. These are some of the big demands the Trump administration has been making in the trade talks. And we do have an update now on the crisis in Hong Kong. The city is struggling to recover after a night of violent clashes. Protesters defied government threats about wearing masks and were met with tear gas. Leaders invoked colonial-era emergency powers to threaten protesters with a year in prison for hiding their faces. Some masked demonstrators threw bricks and petrol bombs. Police arrested dozens of protesters and bussed them away under new emergency laws. China's military threatened to arrest protesters who aimed laser lights at its garrison. More protests planned for tonight. In the meantime, some grocery stores, other businesses have reopened after closing early yesterday. The metro is only partially functioning because of serious vandalism to stations. We'll get a live report from Hong Kong in the next hour.
And in the just don't tweet about anything anymore section of our news today, also making news, the general manager of the Houston Rockets of the NBA had to apologize over a now deleted tweet that spoke in support of Hong Kong protesters. Would seem to be something that you could do, I guess. Maybe we all stand for freedom, right? Freedom of speech. But in this case, the NBA has big interests in China. The tweet from Daryl Morey said, "Fight for freedom, stand with Hong Kong." And then that statement was attacked by the Chinese Consulate General in Houston. I guess he saw it. And then the Chinese Basketball Association, which urged the Rockets to correct the error. Spelling or what. But in an apology, Morey said he appreciated the support of Houston's Chinese fans and sponsors and has had a lot of opportunities since his tweet to hear and consider other perspectives, the non-freedom of speech perspective, I guess. The NBA is now China's most popular sports league. Politicians on both sides of the aisle criticized the Rockets and the NBA for apologizing, including Senator Ted Cruz and presidential candidate.
And I don't know if
Beto
you sort of
O'Rourke.
watched this all play out, but then you had Joe Tsai of Alibaba, who owns the Nets, criticizing him
for
the comment.
For the comment.
For the comment.
Right.
You had the NBA originally come out and say that the comment was regrettable.
Really? But then don't apologize?
It said regrettable. I actually went to look. It said regrettable and understood that it deeply offended other people, but didn't say that they were defending him. And then later came out on a Chinese website, the NBA, later, and went and took it even further and said that this was, that they were extremely disappointed in this inappropriate comment. So it sort of played out over time in this very remarkable way. And clearly, whatever phone calls were being made from Chinese officials to people, by the way, not just, I imagine, Adam Silver, but also people like Joe Tsai, to say, you got to do something here.
Oh, the NBA wants to expand in China.
Right.
CCTV in the meantime said we're not going to broadcast games. Li Ning, the sports retailer, said we're going to cut ties.
Right.
So the fallout was immediate when it came to
what's so interesting to me about this is the NBA had long been seen as handling some of the issues in the United States on the court better, for example, than the NFL.
Remember the kneeling controversy.
And there was the kneeling controversy, and there was a whole view that somehow the NFL was making it was not allowing players to express their own views. This is, and they were not allowed to express their own views for commercial purposes to some degree, right? This is, in very many ways, a geopolitical version of that.
Yes. What? You're shaking your head.
Yeah, I mean, don't bury the lead. I mean, it's like the quest for freedom and everything that we have here can wait because we got some big dough to earn over in China right now as the NBA. That's what this is all about.
They're not the only ones who.
I know, but it's just very cynical. What does when we say
this is like when Netflix, by the way, was having problems in Saudi Arabia because of one of their what's his name, Hassan Minhaj did a show and they didn't like it and they were going to cut them off.
What does it mean that China will not include any industrial policy changes? Is that industrial policy is IP, is intellectual property theft part of its industrial policy? What are we
all connected?
But is that they're saying that's off? What are we talking about? Soybeans now? That's what they're willing to agree on?
They're willing to do nothing. President Xi is sitting here watching all of this. He's got his popcorn out, and he's going to do nothing. He's going to do nothing.
You don't know that for a fact, that he likes popcorn.
I think he's sitting there going, wow, this is quite amazing. He's watching Meet the Press yesterday and going, this is amazing.
Into a theater where you can get like 5, 6, 7 different types of popcorn. Have you seen that?
No.
Yeah, caramel popcorn,
Really?
cheddar popcorn,
All
that.
freshly popped.
All freshly popped. All freshly popped. You can also get a card where you wait in a separate line. Have you been to that one?
I haven't been to that one.
Sounds very fancy.
I don't know. I think it's very. I think. Or they're very cynically at this point. I mean, it seemed to me like that was some sort of support for the protesters in Hong Kong, that we understand what you're doing. And you can't even say that now because you've got money interests in mainland China.
Yes.
Oh, okay. If you're okay with that.
I'm not okay with it.
As a social justice warrior, I thought you'd be all over
okay
this.
with it. And the reason I raised the NFL is if you're not okay with that, you shouldn't have been okay with what was happening at the NFL a year ago.
There could be boycotts of the NBA here in the United States?
If the view was there was business interests around the NFL's position a year or two ago, around kneeling on the field, and there were people who thought it was inappropriate, but there was a view that it was a commercial problem for them. And if you believe that that was inappropriate, then you should have a different view on this too. Meaning it's
I don't see that. I disagree with that completely.
I know you do. I know you do.
See, on one hand, you're pushing back against a repressive regime that has internment camps. On the other hand, are certain people that think that kneeling during the national anthem is disparaging to the United States flag, where we have a different system over here that might be a little bit better overall in terms of human rights and freedom than over.
The United States flag represents the freedom of speech, so this is where it becomes very complicated.
By the way, has the U.S. really taken a definitive stand on Hong Kong with China?
We've got interest there as well.
Exactly.
I understand that.
So do you expect the NBA to take a higher road than the United States government?
I mean, it is, in the United States, it's somewhat money-driven, but it's also, you have to tread lightly in diplomatic circles in terms of...
Sure.
It's not purely that we want to have...
But I'm just saying, if we haven't taken a definitive stand yet, can you expect the NBA to take a definitive stand?
So we hope things work out okay in terms of Hong Kong for both
I'm
sides.
sure that the NBA would be willing to concede that point.
Meantime,
I don't know.
Amid all of that, we've got an update for you this morning on the talks between the United Auto Workers Union and General Motors. Here's what's happening. The union's vice president sending a letter to members yesterday saying talks have now taken a turn for the worse, folks. That marked a change in tone from Friday when negotiators expressed hope that an agreement to end that 3-week standoff could be reached over the weekend. The walkout is now the longest for GM since 1970. When workers picketed for 67 days. Stock up just a little bit there. Shares of GM, although more broadly, we should say down about 10% since the strike began. You can look at what that stock looked like there this morning. It's up marginally.
All right, coming up, new inflation numbers due this week. We're going to get you ready for the data and what it could mean for the Fed next. As we head to break, here's a look at the biggest pre-market.
This CNBC program is...
UWI Bristol thinks your child's next step should be an exciting one, and that it should start right here on this Monday morning, when you register them for our open day. Then, on the 2nd of November, They'll come and discover that UE Bristol gives them more than a university with state-of-the-art facilities, more than academic support to help them thrive, more than real-world connections with practical experiences that complement their studies, and more than a city with the buzz of Bristol. Help them choose more than a degree. Choose a 360-degree experience. To register them for an open day, search UWE Bristol today. After that, anything is possible.
Wood in the lounge. Tiles in the kitchen. Carpet in the bedroom.
Sorry, no sound effect for that.
Ugh, never mind. The new Dyson V11 Absolute at Currys PC World senses, adapts and deep cleans all floor types. It's Dyson's most powerful, intelligent cordless vacuum with an LCD screen that shows its charge level. Plus, get a Currys gift card worth £50 when you trade in your old vacuum and buy any Dyson cordless vacuum. Try in-store today at Currys PC World. Offer ends 22nd October.
To succeed in small business, you need technology that runs efficiently. When you partner with a Dell Small Business Technology Advisor, you get advice, one-on-one partnership, and tailored productivity solutions, including computers with Intel Core processors, servers, storage, networking, plus industry-leading monitors and accessories. It's how they help your small business make the most of every minute. To speak with an advisor today, call 0800 085 4878. That's 0800 085 4878.
Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. And make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
Hearing is an underrated miracle. Intimate whispers, the lushness of symphonies, the soothing patter of rain on leaves. If you had that taken away from you, it would be a massive loss for most of us. Almost all of us go every day without really stopping to think about just how important it is to us.
Audible presents The Body, a guide for occupants, written and read by Bill Bryson, including original bonus material exclusively available at Audible. Listen free as part of your 30-day trial, $7.99 a month after 30 days, renews automatically.
Welcome back to Squawk Box. On the calendar this week, Fed Chairman Jay Powell is set to give a speech tomorrow in Denver. We'll also get minutes from the central bank's latest meeting and some new inflation data. Yippee. Okay, U.S. equity futures at this hour, as you can see, down about 128 points, 127 points, almost 400 points of gains on Friday, so getting some of that back. Tough start to the quarter, though, as we have pointed out. Joining us now, Kevin Cummins, Senior U.S. Economist at NatWest Markets, and Mark Grant, B. Riley, FBR's Chief Global Market Strategist. Kevin, let me just start with you. Now there's worries, big piece in the Wall Street Journal, that earnings, which we're right on the cusp of when we're going to be, swamped, in the swamp, which is a loaded term now, but that's coming. Is that where we need to focus our attention in terms of worrying about whether there's a recession signal there or no?
I think that's right. I think the U.S., there's very much real concern here that the economy is moderating, and last week's ISM surveys indicated that there could be some even more downside risk to the outlook in the very near term. Friday's jobs report was decent enough that I think at least it doesn't show that the labor market is collapsing, but it's slowing right now. But the broader economy seems to be slowing down, perhaps quicker than people think.
Mark, we haven't spoken in a while. I just wonder where you think we are on the big picture. Still got quite a bit of negative interest rates around the world. We got repo issues happening here. I was wondering whether you consider that to be some type of canary in the coal mine, or what's happening?
Yeah, Joe, I think we have $17 trillion in negative interest rates in the world right now. It's almost incredible. Nobody 10 years ago would have ever thought this possible, and here we are. Well, the big story, of course, has been China. What's going on is that the nations in Europe, by raising taxes or selling assets in normal ways and historically that they would be able to pay for their budgets and social programs, can't afford them, so they got the ECB to print pixie dust money from nothing, and then they bought sovereign debt and corporate debt, and they've lowered interest rates either to very close to zero for some of the southern European nations and far less than zero for a number of other nations. And so the Fed, in my opinion, has to respond to this. They are America's central bank, and they've got to stand up and, in my opinion, lower rates. I've encouraged them to lower rates not less than zero, but slightly over zero to deal with this Game of Thrones issue with the European Union.
Does that make sense to you, Kevin?
Well, I think the big concern from the U.S. Standpoint is the uncertainty with regard to trade. I think there's a lot of downside risk. I think that it's not something that we at NatWest Markets thinks it's going to be resumed anytime soon. I think if you going into an election year, even just removing the uncertainty with regard to trade, there's possibly two very different policy outcome approaches depending upon who wins the Democratic nominee, whether it's Elizabeth Warren or if Trump is reelected. So I think going into that, business decision makers are very unlikely to feel very inspired to re-engage in activity next year. That I think the global economy is already starting to show pretty clear evidence that the trade uncertainty is really starting to spill over to the U.S.
Mark, do you think that I read an article this morning about Zero Hedge on repos, and I'm not sure I buy it, but if there's something, where there's smoke, there's fire. Does this turn into anything, or what do you think? No?
No, I don't think so, Joe. I think this has to do with short-term funding, with the auctions, with the demand for the dollar for a variety of reasons, and I think the Fed is more than capable of dealing with by its repo activity. And no, I don't think there's going to be any fire, Joe.
We should learn a little bit more about it this week, as you mentioned at the top. We'll get the minutes from the September FOMC meeting. And I think the Fed is going to be pretty clear in that they're trying to address any sort of stress in funding levels, but that it's very much a technical aspect of their balance sheet unwind. They're kind of going in the dark here with this new ample reserve regime that they're following, and they're kind of feeling their way along, trying to hit the right level of reserves. But I think they'll make pretty clear, and Powell has kind of emphasized this at the September meeting, the press conference, that it's certainly something that they're going to try to address, but it's clearly not a monetary policy issue that they're going to try to, say, engage in QE anytime soon, that they are very much focused on this being a technical issue and not something related to monetary policy. But I do think that there is a lot of concern, and last week's ISM reports, I think, highlight downside risk to the economy, that the Fed is going to keep their foot on the pedal. I think that they're in this for the longer term than even that they are leading on to, that they're going to have to ease rates later again this month. They're probably going to have to continue with that sort of policy approach further than what they think. Up until now, they've categorized this as a mid-cycle adjustment and taking out some insurance. Clearly, the economy is not collapsing, witnessed at least by the labor market data, but there are downside risks that we think the economy is going to continue to struggle here.
All right, Kevin, thanks. Mark, thanks. We have a Nobel Prize for Medicine.
We do.
You know what's tomorrow is physics. Wednesday is chemistry, and then Thursday is literature, 2018 and 2019. Did you know that? Did you know that? Because it was, you know everything. But actually, because last year the literature prize was suspended.
Right.
Because of a scandal.
But they can find somebody that they would.
No, it was a scandal that rocked the academy.
But does that mean that they're going to give it to?
They're going to give it to
somebody from 18 actually gets one.
Yeah.
Okay.
There's two.
Coming up when we return, we'll talk about that perhaps, but we'll also talk about high valuations and slumping stocks from some recent IPO companies, and one potential factor that could make startups worth your investment dollars. Bit of a surprise.
Get ready for Brexit on the 31st of October. Brexit will bring changes that affect businesses in many ways, particularly if you buy from EU suppliers, sell to EU customers, provide services to EU clients, and receive customer data from other businesses in the EU. Businesses need to prepare. Find out how at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
Right now, the future is being written by people like you. Creative thinkers, tech lovers, problem solvers. Are you going to stand by and watch? Well, show the world what you've got. Join others around the UK on an EY degree apprenticeship in digital and technology. And earn a salary working with exciting businesses while studying towards a degree. Don't let the future pass you by. Get involved. For more information and to apply, search EY Digital Apprentice.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
Oh, look who's home. Long time no see. You haven't changed a bit. Come on in. Welcome back.
With genuine BMW expertise, parts, and a convenient range of options to suit you, when it comes to caring for your BMW, there's no place like home. Book your BMW service online 24/7. T's and C's apply, subject to availability, participating retailers only.
Now, let's take a look at you. The relaxing sound of fresh, cold running water. And you can have it in your kitchen. With amazing savings on Samsung fridge freezers at Currys PC World. Like the RB31 with its chilled water dispenser for only $399. Or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space. At just $1,049. How relaxing. At Currys PC World. Energy rating A+. T's and C's apply. To succeed in small business, you need technology that runs efficiently. When you partner with a Dell Small Business Technology Advisor, you get advice, one-on-one partnership, and tailored productivity solutions, including computers with Intel Core processors, servers, storage, networking, plus industry-leading monitors and accessories. It's how they help your small business make the most of every minute. To speak with an advisor today, call 0800 085 4878. That's 0800 085 4878.
Fly from London Heathrow to Shannon from $55.99 each way as part of a return trip with Aer Lingus and experience something new on your next trip to Ireland. Discover the soaring cliffs and stunning scenery of the wild Atlantic Way. Explore the charming local towns and relax by the fireside with some traditional music and fresh seafood. Smart enjoys a short break in Ireland. Smart flies, Aer Lingus. Book now at airlingus.com. Offers subject to conditions and availability.
Welcome back to Squawk Box this morning. A number of companies going public in 2019 with hybrid definitions of and high valuations in the private markets. Peloton, Uber, let's go through the list. Lyft, all down. You can look at that screen right there. They're down double digits since going public. Meanwhile, Slack, which is software specific, down only 4% since its direct listing. It's a little bit better. We don't have Zoom on that, which actually zoomed up. Joining us right now to discuss the struggles facing hybrid companies in the public market is Andrew McAfee. He is the principal research scientist at MIT. He's the author of More from Less, the surprising story of how we learned to prosper using fewer resources and what happens next, which is out tomorrow. Nice to see you.
Thanks for having me on.
You've written a number of books over the years, and we've loved all of them, typically around this idea of what's going to happen to the workforce and what's going to happen to society. This is a little bit different, I think, because it really relates to software versus everything else.
Versus everything else, right.
Right. But in terms of this specific issue, just to start the conversation on how these IPOs have traded and how people think about these kinds of companies, why do you think that Is it a valuation story that's taking place in the market, or revaluation story that's taking place in the market, or is it something else?
I think the valuation story points to something that might be pretty fundamental, right? Which is that we're moving from an economy where atoms are central to an economy where bits are central. And these companies that you highlight, like Uber and Lyft and Airbnb, they're sitting in the middle of them. And the unit economics can be really difficult. You got pure play software companies, and I think Slack is a really, really solid company. We've seen Zoom. Right. The margins of completely bit-based businesses can be really, really attractive.
But so this whole idea, though, that we're going to graft software companies effectively onto more traditional companies was supposed to give a lot of these companies both a higher valuation, a better business model. You think not so much?
I'm still long-term really positive on, call it the sharing economy, on transportation network companies, on Airbnb, because what they're letting us do is make better use of these assets that are otherwise just kind of sitting around idle. The average passenger car is idle 95-ish% of the time. Right. That's ridiculous. Let's put some software on top and increase the utilization of those things.
But what's then the appropriate way to think about the value of them?
I think you got to bake it upward from the unit economics. If these companies can demonstrate that on a per transaction basis they're doing well, then things start to look rosy. They're just incurring huge losses to set these businesses up and grow them.
Was WeWork ever a software company?
No.
Ever a technology company?
No.
At all? So that's the other question. When you have technology, at what point is it a hybrid company?
Look, I'm a huge fan of Netflix.
I mean, CNBC we use computers.
That's right.
But really it's a media company.
You're a media company, right? And I'm a customer of both Netflix and Peloton. Right. I wouldn't call either of those technology companies anymore. Of course, they use technology, but it's just kind of in the background for their streaming, and in Peloton's case, a hardware business, a really good piece of hardware.
So what's that line? I mean, why is WeWork different from a WeWork if a WeWork is using... Let's say it employs a platform that helps match up unused office space with users. Isn't that the same thing? You're helping assets be utilized more efficiently.
Yeah, it kind of felt like a short-term rental company with a whole lot of dressing on top of it that's kind of falling away. But there are these assets all over the economy that are underutilized. I do think we're going to use software to make much more efficient use out of them. And that's bad news in some cases for the asset holders.
Efficiency only comes to the owner of the assets. So if you have an Uber and Lyft who don't own the assets, can they actually reap those benefits? Because we see that they don't make any money. Even though they are utilizing these assets better, they don't own the assets.
Yeah, well, Uber owns both the people who want to ride and the drivers. They own that relationship. They own that transaction. I'd much rather own that than own a car or own a taxi.
So when you're saying utilizing assets more efficiently, what are those assets that you're talking about? Is it a relationship?
No, it's
or is it a hard asset?
It's the spare room in my house. It's the car that's otherwise sitting idle in the driveway. Those assets are going to be put to a lot better use in the economy that we're creating. The whole reason I wrote this book is because essentially the total American economy is now weighing less year after year. And I think that's kind of an important, kind of a weird phenomenon. We weren't expecting it. I kind of walked around with this notion that as economies grow, they need more resources, they need more atoms. I think that's just not true anymore.
I don't know if you can see the screen over here. Where does Beyond Meat? That's not a tech company, but it is trying to utilize atoms in a different way.
In a very different way, with a whole lot of technology, right? So is it implausible that we're going to look backward by the end of our lives and find it weird and barbaric that we used to get our protein by slaughtering animals? I don't know, but it's not crazy talk anymore.
You mean look back on like 4 billion years of doing it that way?
Oh, okay. For most of our history, we sat there and domesticated animals and didn't go on fossil fuels, and now we do.
I was thinking about feeding my dogs plant-based stuff, and I think most dogs probably can use meat as far as what nutrients are there in terms of carnivores because of evolution and years of that. I don't know whether we're the same. We're not dogs. We've moved beyond that. But I'm not necessarily convinced. I mean, the whole hunter-gatherer background that we have, I'm not sure that that's progress to go to eating a bunch of... I'm not... In fact, there's been some studies recently that maybe vegan lifestyles are not
Hold on, I'm not talking about veganism.
Okay, whatever.
There are other ways to get proteins than killing animals.
Okay, before we go, I just have one final question that's completely unrelated to all this. Every time you come on historically, we have talked about the workforce in America.
Yeah.
And whether it's about to get upended completely by technology. And if you look at the unemployment rate today, you would say something is amiss with the argument that you and I have had on this
for years.
For years.
Yep. And you're winning that argument, right?
Well, I don't know if I'm winning it. I think I was just as worried as you, actually. I think probably Joe's winning that argument.
So we don't see the era of massive technological unemployment anywhere in the evidence, anywhere at all. And I'm going to steal a line from Bob Gordon, a good economist. We don't have a job quantity problem. Right. I think we have a job quality problem. And those great middle-class jobs, clerks and assembly line workers, those are in the rearview mirror. We've got to invent the middle class for the second machine age, not for the industrial era.
Andrew, it's great to see you.
Always a pleasure.
The book is called More from Less. Thank you very much.
Thanks.
Coming up, a big upgrade for Uber this morning. We'll tell you what's behind that call next, plus how Apple CEO Tim Cook won the ear of the president. That story straight ahead. And as we head to break, take a look at Friday's S&P 500 winner.
Executive Ed just...
Get ready for Brexit on the 31st of October. Brexit will bring changes that affect businesses in many ways, particularly if you buy from EU suppliers, sell to EU customers, provide services to EU clients, and receive customer data from other businesses in the EU. Businesses need to prepare. Find out how at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
Fly from London Heathrow to Shannon from $55.99 each way as part of a return trip with Aer Lingus and experience something new on your next trip to Ireland. Discover the soaring cliffs and stunning scenery of the wild Atlantic Way. Explore the charming local towns and relax by the fireside with some traditional music and fresh seafood. Smart enjoys a short break in Ireland. Smart flies, Aer Lingus. Book now at airlingus.com. Offer subject to conditions and availability.
What's going on, peoples of London? If you eat last night's leftovers from lunchbox or your mouth water when microwave go ping, then you commit crimes against cooking. So thank goodness for Meerkat Meals. Dine out with 2-for-1 on food at your local favorites, like Chicago Rib Shack Wandsworth and Café Rouge. All with the Meerkat app when you buy, so compare the market.
Oh, lunch is ready.
I'll get my coat.
Qualifying purchase 2-for-1 on equivalent starters, mains and desserts, a la carte only, Sunday to Thursday, T's and C's and exclusions apply.
The MLB is in full swing.
Looking up, and this one is up and out. A home run.
Swung on and into the air to deep left. That ball is high. That is far. That is gone.
To listen, just search MLB Today on TuneIn Premium so you don't miss a moment of the games on TuneIn.
Make sure to follow TuneIn Today so you're always in the know. Twitter, Facebook, Instagram. Just search @TuneIn.
TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live, regular season matchups and rivalry games, conference championships and bowl games, the college football playoff.
Throw it. He's got it in the stiff arm. End zone. Touchdown.
You can listen to it all for free at home, on campus, or on the road. Hear the excitement and pageantry of college football all season long, free on TuneIn.
Welcome back. You're watching Squawk Box, live from the NASDAQ market site in Times Square.
Good Monday morning to you. Let's take a quick look at U.S. equity futures. We are in the red now 3 hours before the market would open. Dow looks like it would open down about 107 points. NASDAQ off about 29 points. And the S&P 500 looking to open down about 11 points. We also have an analyst call to tell you about right now. Citigroup upgrading Uber, taking it to a buy, I should say, from neutral. It is keeping its $45 price target. The analyst there says overhang from the IPO will likely persist, but Q3 earnings may refocus the story, particularly on ride fundamentals. The analyst also thinks that revenue growth will accelerate. So is that more bullish if the price target doesn't change? Hold to buy, but...
Well, I mean, the stock is probably lower from where when the analysts had the neutral rating.
That's fair.
The last earnings season was tough for Uber after it followed Lyft, and Lyft had actual a path to profitability, and Uber, by contrast, did not. So it'll be interesting to see if this analyst's call is right. PayPal's withdrawing from the group of companies that Facebook assembled to launch a global cryptocurrency-based payment network. The company said it will forgo further participation in the Libra Association, but remains supportive of Libra's mission and will continue to discuss how to work together in the future. Last week, the Wall Street Journal reported that Visa, MasterCard, and other financial partners were reconsidering their involvement in Libra following a backlash from U.S. and European government officials.
And a piece in Saturday's Wall Street Journal details how Apple CEO Tim Cook won Donald Trump's ear, the president. It says Cook developed close ties to Jared Kushner and Ivanka Trump and meets regularly with Trump advisors like Larry Kudlow. The piece says Cook is flagged to the Trump administration if he disagrees with a policy before he speaks about it publicly. Perhaps as a result of that, Apple has spent about half the amount on lobbying as other big tech companies like Amazon and Alphabet.
Coming up, the state of the consumer with recent volatility in the markets. How has retail been holding up? We'll discuss that next. And later, we'll speak with former Aetna CEO Mark Bertolini about one of the biggest issues in the 2020 election and what it could mean for healthcare companies. Stay tuned. You're watching Squawk Box on CNBC.
The problem with traditional cotton sheets is that they trap heat and moisture.
You don't just live in one room, so why should you Wi-Fi? With Sky Broadband's Wi-Fi guarantee, you'll get Wi-Fi in every room or money back. Perfect for food shopping in the bedroom, gaming in your PJs in the lounge, or streaming sci-fi movies in the kitchen. Get Sky's super-fast broadband and Wi-Fi guarantee. £32 a month for 18 months with $19.95 setup. Click on the banner now.
Sky Fibre Areas, Sky Kit required. Refund on boost component of subscription paid during current minimum term up to date of claim. Minimum 3 megabits per second or money back. Prices may change during minimum term. See sky.com/guarantee.
The relaxing sound of fresh, cold running water. And you can have it in your kitchen. With amazing savings on Samsung fridge freezers at Currys PC World. Like the RB31 with its chilled water dispenser for only $399. Or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space. At just $104.9. How relaxing. At Currys PC World. Energy rating A+. T's and C's apply.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Next time you look up at the stars, think about this.
Inside you are the remains of a stellar explosion. You are made of stardust. And without the stars, there wouldn't be us.
I'm Guy Raj, the wonders of the universe and the people who still look up every night. Next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every...
And it's a home run!
Single...
And gone!
Game.
And that gone, a home run!
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit...
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone!
Upgrade today.
You're listening to TuneIn, where you can hear all the audio you love in one place. Live NFL games, the hottest music, breaking news, and podcasts. Push play and go about your day, only on TuneIn.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Hi, this is Brian Weber, host of NFL First and Goal, every Sunday, kicking off at 1 Eastern, only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content. Learn about hot new podcasts and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most.
American consumer has been one of the few bright spots reassuring investors that the economy can keep chugging along. Joining us now to check in on the state of the consumer, Jan Kniffen, CEO of J. Rogers Kniffen. He's also a CNBC contributor, and Jerome Martis, Director of Consumer Research at Refinitiv. Welcome to you both. Jerome, I'll start with you. It was so concerning for the markets last week when we saw ISM services come in worse than expected. And I'm wondering, when we typically see that, at what point do you start getting concerned that that will spill over to the consumer? Because those were the dots that people were connecting.
Right. The key component, the key performance indicator that has the highest correlation with consumer spending is the unemployment. And that did hit a 50-year low. So until we start seeing that number to deteriorate, I think that's when we will be more concerned about consumer spending. Right now, when you look at the government retail sales, you look at our Refinitiv same-store sales data, it all points to a slowdown compared to 2018, but it's still expected to be healthy for the third quarter. It's expected to see a 2.6 growth. This is below the 4.2 growth that we saw last year. And the only alarming thing here is that retailers are becoming less positive than they were a year ago. So to date, we've received 39 negative pre-announcements and only 15 positive. And this is less positive than we saw this same time last year. And this is mainly because retailers are very much concerned about the tariffs. They've mentioned it over 300 times in their earnings calls this year alone. And that's just the beginning.
At the same time, while we got 39 pre-announcements from retailers, we have had some pretty stellar earnings reports as well. So where do you stand on how the tariffs are really impacting? Because you have people, the companies that can execute really well, like a Nike, and they're still doing well. And they show that with their earnings report.
Well, Jerome's right. We're seeing a really tough time to play in retail. On the other hand, we've got a fabulous consumer. So we haven't seen any issues with the consumer. The consumer is very healthy. The consumer's spending. The consumer is probably going to be up, I think, 4% for Christmas, which would be a damned healthy number. But we're seeing a struggle as far as making money in retail because there's way too many people doing it and brick and mortar struggling.
You have a rule about whether the recession is coming or not. Tell the audience the rule, because I think it's a actually fabulous way to think about it.
Well, the one you're probably talking about is I say all the time, we survey the customer and we say, do you have a job? And if they say yes, will you keep your job? And if you lost your job, could you get one that paid just as much? And if more people answer all three of those positively, the world's great. And if they answer it negatively, your sales slow down. It doesn't have to be a recession. It can just be a slowdown. Right now, I would suggest that number, if I did that survey, would be the best it has ever been.
You haven't done the survey? So we're back to your opinion, is that it would be good?
Yeah, that's my opinion. It would be good. I haven't done the survey again.
Okay.
But we did the survey all the time, and we knew what the results looked like. And if you went out right now and asked your friends that question, what would the answer be?
Okay, so here's the question. It's funny. That, under those metrics, I think he's right. And yet you looked at J.P. Morgan over the weekend, come out with that report. I don't know if you saw it, where it's suggesting that the Fed's got to drop rates because a recession is coming. So how do you square both of those issues?
Well, eventually there will be a recession. We haven't repealed the business cycle. But right now, the consumer's very healthy, and the consumer's 70% of the economy.
I mean, we've got to let unemployment go to 3.8 before we start worrying about a recession. Wouldn't we see...
You can't have a recession at 3.5% unemployment.
That's my point. Wouldn't we see some signs of weakness there?
Well, but that's why you're having conversations about repo and these other issues.
Right. The thing is that the unemployment's a lagging indicator, really, kind of, or at best coincidence.
The consumer's spending like crazy, and they've got an 8% savings rate. When have we ever seen that? Never. They've got plenty of dry powder. Normally, at an 8% savings rate, you'd go, oh, my God, the consumer's shut down. We're never going to have any sales.
A lot of people are counting on not you, but a lot of people are counting on a recession before November of 2020. I think there are.
They're rooting for it.
There are a lot of cheerleaders rooting for a recession before 2020.
Not true. Not true.
There are a lot of cheerleaders rooting for a recession before 2020. Not you, maybe, but there are a lot of people.
Oh, you think for political...
I'm not saying you.
Okay. Democratic Party is what you're
saying. Just some people. I don't know what party they're in, but some people somewhere. Don't you agree, Dan, that there are?
Well, I hear plenty of it. So
that's what I mean.
Saying that seems like that's what's happening.
I have ears. And they were big when I was a kid. People thought I looked like a taxi coming at them with the doors.
So
but neither Jerome or I think there's going to be a recession based on the consumer.
That is correct.
If there's a recession, it's going to be driven by something besides the consumer, because the consumer is really healthy.
The consumer, though, is not immune from seeing stock market volatility and seeing the headlines about fears of a recession. So even though they have an 8% savings rate, I mean, you can make the same argument for companies and the cash on their balance sheet. They have lots of cash on the balance sheet, but CapEx is only going to rise 3% in the third quarter, which is the lowest since, January January 2017. So couldn't the consumer still pull back even though unemployment is still low and things seem to be okay right now?
I think it's more of a retail competition within themselves. So what's happening is that the consumer is rewarding those retailers. They're offering them a very convenient and effective way of shopping. And those are the retailers that are investing in omni-channel. The retailers are doing a really good job in luring the shoppers in and through all their channels, be it app, in-store, internet, and they are using that data to really study the consumer and manage them. And it's paying off. It's paying off at Target. It's paying off at Walmart. Target especially doing a really good job and not only investing in really winning over the millennials, which we're seeing other retailers do, but really winning over all of the generations. And that's why they're doing so well.
Yes, online's winning, off-price is winning, discounts winning, off-mall is winning, rental is winning, resale is winning, full price on mall is failing. And that's those 26
we've seen
bankruptcies
that in
we
the
see.
Performance of the stock. So you have a Walmart, you have a Costco, you have a Target that's done extremely well. And at some point, do you say they've been rewarded enough and their valuations are full?
It's hard to imagine a recession's coming when the business is great at Walmart and Target, which is the world. And trust me, the average consumer is not watching this show, and the average consumer is not reading the Wall Street Journal. The average consumer is going around going, I've got a job, things are great, I'm taking more pay home than I ever have, 3% growth with non-supervisory personnel on wages. What else can you ask for the consumer?
I agree.
Speak for yourself. I want the average worker to be watching this show, but go ahead.
But I agree with him. The one economic indicator that consumers are paying attention is the unemployment number. So they might not be watching the show or the Wall Street Journal, but that's the one key economic indicator that will determine if they're going to put their hands in their pockets and hold back on spending.
Okay. Jerome, thank you. Jerome Martis and Jan Niffen.
All right, a news alert. General Electric has announced a series of actions that it says it will cut its pension plan deficit by up to $8 billion. It will offer lump sum payments to former employees who haven't yet started to collect. It will freeze the plan for existing employees and move current participants into existing defined contribution plans.
Okay, a lot more on Squawk this morning. Demand for Apple's iPhone 11 stronger than expected, but with the stock already up sharply this year, is it too late to buy Apple shares? We're going to talk tech right after the break. And as we head to that break, quick check on what's happening in European markets right now.
The relaxing sound of fresh, cold running water. And you can have it in your kitchen with amazing savings on Samsung fridge freezers at Currys PC World, like the RB31 with its chilled water dispenser for only $399, or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space at just $104.9. How relaxing at Currys PC World. Energy rating A+. T's and C's apply.
Next time you look up at the stars, think about this.
Inside you are the remains of a stellar explosion. You are made of stardust. And without the stars, there wouldn't be us.
I'm Guy Raz, the wonders of the universe and the people who still look up every night. Next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Deep left center field. A grand slam!
October baseball is here, and TuneIn Premium is your ticket to the 2019 MLB postseason. Featuring the home and away feeds for every game, TuneIn Premium delivers every call of the ALCS, NLCS, and the 2019 World Series through the voices of the local radio broadcast teams.
In the air, left field and deep. He's at the wall!
Now until a new champion is crowned, hear every play of the 2019 MLB postseason live on TuneIn Premium. Upgrade today.
At home or on the go, stay up to date on the latest news and political trends with Fox's full lineup of shows. Plus, when news breaks, Fox has you covered with live updates and expert analysis on the biggest developing stories. Listen to Fox News Talk anytime on TuneIn.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
You're listening to TuneIn, where you can hear all the audio you love in one place. Live NFL games, the hottest music, breaking news, and podcasts. Push play and go about your day, only on TuneIn.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Welcome back to Squawk Box. Apple recently telling suppliers they have to ramp up production on the iPhone 11 due to unanticipated demand. But now that the stock is up over 40% year to date, is it too late to buy in? Joining us right now to talk more on Apple and other Apple stock and other tech stocks, I should say, is Tim Lesko. He's partner at Granite Investment Advisors. Good morning to you. Question of the morning. You've seen the news and you've also seen where the stock already sits, Tim. Does it make sense to buy in from here?
Well, certainly the valuation is not at some sort of stretched multiple where we're really concerned that Apple is overvalued. At the same time, every time there's a supplier discussion surrounding Apple, it's either that they're cutting production or raising production, and nobody has a really good view as to what the supply chain is doing for Apple, where they're moving orders, where they're increasing orders. So we're not going to run out and buy it based on this news, but we're pretty happy to see Apple get a reasonable multiple.
When do you think we're going to get to a point where all this hardware news is actually old news, which is to say that Tim Cook's strategy of turning itself largely into a services company, I don't know if you think that's even possible ultimately, but if he is successful, that we won't be talking in the same way about, what suppliers are saying this month or that month?
I think, Andrew, we're probably 2 or 3 years out from a ubiquitous 5G world where more and more and more services will be available. And things like the iPhone will be our window into those services. And that's really when you get a chance to see revenue from Apple and earnings from Apple be less than 50% iPhone.
So what are those?
That really will be a time.
So when you say 2 or 3 years out, you think about 5G and that happens. What are the services you think that are going to come that we don't know about now?
Well, you've seen little instances of it. You're seeing Apple get into broadcast media. You're seeing Apple get into a more robust online gaming platform. Then you're going to move into transportation. You're going to move into your information, those things that you have a digital license to, following you wherever you are. So it's hard to say what devices are going to have a 5, 7, 9-inch screen in them.
But Tim, the issue historically has been that Apple has made all of the hardware, right? That's always been part of it, and we're seeing a shift in that strategy in the TV business, in that they're going to be on Roku and everybody else's service. Well, we don't know if they're going to be on the Amazon service, but the Amazon TV service, right? That those Amazon boxes they said on Friday may not have it. But how does that sort of play itself out, and therefore how important is the entire hardware ecosystem long term?
Well, I think that you've hit the nail on the head, and that Apple has enjoyed incredibly high margins on all the hardware, and it's been a profit driver. They've got to make sure that as they roll out these other services that they're profitable. A lot of other services are out there that are not, but if you look at the watch, you look at AirPods, you look at all the other ways that they're trying to make sure that they wrap you into the ecosphere, I don't see it really being a hard thing for Apple to make plenty of margin on whatever device it is that you're going to access that content.
If you weren't going to buy Apple, what else would you buy in tech land?
Well, in Techland, there's a lot of cheap stocks. If you look at Intel, 11, 12 times earnings. If you look at the semiconductor capital equipment space, they're trading in the mid-teens on earnings. These are pretty low valuations for companies that are at the forefront of what's going on. It's been 25 years that technology has really become a consumer staple, yet we still only have a handful of manufacturers in semiconductors and capital equipment that drive the market.
Make the case for Intel, though, at this point, because I've heard as many bears out there as I have bulls these days.
Right. Well, certainly the bear case against Intel had been that they were slow to thinner chips. AMD had a technology advantage on them, and the thought was that AMD was going to be able to take the most profitable server business away from Intel. Then suddenly AMD ran into some production issues and yield issues on their thin chip. So it is not easy to make semiconductors. It takes a lot of capital and it takes a lot of experience. So at 11 or 12 times earnings, it's hard to really bet against an Intel being part of what's going on. And they've spent a lot of money over the last 10 years on their equipment.
Interestingly, you seem to like hardware. Why do you like hardware? Is there a tech services company you like?
Well, I guess if you look at Microsoft, which we've owned for some time, that's mostly now a services company. It's always been a software company. They actually are pushing more towards hardware. I think what we're looking at is in a data security world, people are really trying to vertically integrate their product sphere the way that Apple has. So as they all move towards that, there's still probably some room to grow.
You saw Microsoft's planning to, or just unveiled, did you see this? This foldable smartphone, as if they're getting back into the smartphone business using the Android platform?
Well, that's it. I think that Windows as an operating system for cell phones was a failure. There really wasn't room for another player in that duopoly. If you really want to control your consumer, you have to control where their eyeballs go first, and Microsoft's trying to do that. I'll concentrate more on what they're doing from a web services standpoint, from a business services standpoint. That's really always been their strength. So I'd like to see them continue to concentrate on delivering that to business consumers.
If you get on Microsoft or Google, what do you think right now?
Well, we own Microsoft. We own a little bit of Google. It's hard to look at the internet and not say that the tailwinds of more online services, more online advertising aren't there, regardless of the noise generated by Washington. So hard to bet against these companies on a 2, 3, 5 year basis.
Okay. Tim, we're going to leave the conversation there, but we appreciate your perspective this morning.
Thanks for having me.
Thank you.
Coming up, futures are now bouncing off their lows this morning. We'll get you ready for the start of the trading week. 76 points now on the Dow. We're down triple digits before. Plus, a little later, former Aetna CEO Mark Bertolini will join us to talk about the healthcare sector, including the potential impact of the next presidential election and what healthcare stocks are pricing in. And we're talking about Elizabeth Warren, who is now most likely the Democratic frontrunner. Stay tuned. Squawk Box returns.
Squawk Picks is sponsored by Wisdom Tree.
Get ready for Brexit on the 31st of October. If you buy items from EU suppliers or sell to EU customers, there'll be new requirements affecting businesses of all sizes. You'll need an EORI trader number and know how to make a customs declaration. You'll also need to make sure you have the right supporting documents for the goods you buy and sell. Find out more about how to prepare. Follow the step-by-step guide at gov.uk/Brexit-traders.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply. To succeed in small business, you need technology that runs efficiently. When you partner with a Dell Small Business Technology Advisor, you get advice, one-on-one partnership, and tailored productivity solutions, including computers with Intel Core processors, servers, storage, networking, plus industry-leading monitors and accessories. It's how they help your small business make the most of every minute. To speak with an advisor today, call 0800 085 4878. That's 0800 085 4878.
Hello, Vitality Health Insurance.
Oh, hi. Is it true if I join Vitality, I get de facto 5-star rated cover, can speak to a GP 24/7, get rewarded for staying active with things like Starbucks coffee, get a little sausage dog to live with me, and you could beat my current premium by up to 10%?
Absolutely. Except one of those.
It's the dog, isn't it?
Yeah.
Time to review your health insurance. Just search Vitality Health. Vitality. Positively different. Minimum monthly premiums, terms and conditions apply.
You don't just live in one room, so why should you Wi-Fi? With Sky Broadband's Wi-Fi guarantee, you'll get Wi-Fi in every room or money back. Perfect for food shopping in the bedroom, gaming in your PJs in the lounge, or streaming sci-fi movies in the kitchen. Get Sky's super fast broadband and Wi-Fi guarantee. £32 a month for 18 months with $19.95 setup. Click on the banner now.
Sky Fibre errors, Sky Kit required. Refund on boost component of subscription paid during current minimum term up to date of claim. Minimum 3 megabits per second or money back. Prices may change during minimum term. See sky.com/guarantee.
It's on edge as we head toward the opening bell on Wall Street. A look at what will drive stocks today is ahead.
Valuations gone wild. A dive into the underperformance in IPOs. Former NASDAQ chief Bob Greifeld is coming up.
And what an Elizabeth Warren presidency would mean for the healthcare sector. Former Aetna CEO Mark Bertolini sounds off as the second hour of Squawk Box begins right now.
Live from the beating heart of business, New York, this is Squawk Box.
Good morning and welcome back to Squawk Box here on CNBC. I'm Joe Kerner along with Melissa Lee and Andrew Ross Sorkin. The futures now have paired, at least in the Dow, paired their losses to around 50 points. We were down triple digits previous, or when we started the show, in fact, indicated. And now we got the NASDAQ indicated down 12, and the S&P down 5, just about 6. So we gained almost 400 in the Dow on Friday. Looked like we were going to give quite a bit of that back, but all bets are off at this point. 47 points, and it seems to be upticking right now.
We had an improvement in the 2-year yield, which is, I mean, we went from 138 when we started the show to 140, so that help the futures picture at this point. Here's what's making headlines at this hour. Kansas City Fed President Esther George says concern about low inflation seems unnecessary. In a weekend speech, she pushed back against the idea that the Fed should cut interest rates to try to boost inflation, which she attributes to global forces that U.S. monetary policy cannot impact. General Electric has announced a series of actions that says will cut its pension deficit by up to $8 billion. It will offer lump sum payments to former employees who haven't yet started to collect. It will freeze the plan for existing employees, move current participants into existing defined contribution plans. That stock is up almost 1% right now. And hedge fund manager David Tepper will begin returning money to investors early next year. This according to a Bloomberg report. But he will continue to manage money for 15 investors who have a total of about $1.5 billion invested with Tepper. It had been reported earlier this year that Tepper would be winding down his operations.
But an update now on the labor talks between the United Auto Workers Union and General Motors. The union's vice president sent a letter to members yesterday saying talks have taken a turn for the worse. And that marked a change in tone from Friday when negotiators expressed hope that an agreement to end the 3-week standoff could be reached over the weekend. The walkout now, the longest for GM since 1970 when workers picketed for 67 days. Shares of GM are now down about 10% since the strike began.
Okay, markets may have cheered the Friday jobs number, but not so for the dismal scientists. For them, bad news really is bad news. Senior economics reporter Steve Leisman joins us now with more on the good news, bad news is good news.
Yeah, it was interesting to see how the market traded last week as the markets equities went up because the Fed probabilities went up along with it. But economists not especially cottoning to the number. While markets seem to think bad news is good news because it brings in the Fed, economists see signs of reduced economic growth ahead. HFE, Jim O'Sullivan writing, the data remain consistent with an economy that has slowed significantly, but not to the point of recession. Over at Barclays, they wrote this slowdown in employment likely to cause household spending, which has been the bright spot in the economy, to moderate. Jan Niffen doesn't think so. He's among the optimists who point to a high savings rate and low unemployment and decent wage growth to support their view the consumer will keep on spending on and the U.S. will avoid a recession. Here's the rapid update numbers. Q3 tracking just 1.5. For most of the quarter, it's been tracking 2. The August data has come in weak. We don't have the September data yet, but it seems like the August data has shaved about 0.5 point off GDP. Q4 looking at 1.9. We did 2 in Q2. And here's the estimates. Goldman, they're actually at the top of the range right now of our median of tracking forecasts out there. They're at 2%. Atlanta Fed 1.8. Action, the Texas Barclays all at 1.5 and RSM at 1.4. In the NABE Outlook survey just released today, 80% see risk tilted to the downside. The average forecast sees a 47% chance of recession. That's down from 60% in the prior survey. Everybody have a great day. I wish I had better stuff to say.
I have one question.
Everybody have a great day.
12 months. 12 months?
By the end of 2020.
Before we nap, I have one question.
It was 7 for this year, 24, but together it's 47.
Did you hear about the Niffen theory this morning?
I heard Jan talk. What's his theory?
The Niffen theory is it's all a consumer story, and if you go to a consumer and you stand on the street and you say, do you have a job? What was it?
Get a better job.
Can you get a better job?
The same amount.
Yeah.
And if you lost your job, could you get a job for the same amount of money or more? And if you answer all 3 questions, yes,
you're making more than
then all of this is,
is Jan actually taking credit for that?
Not only is he not, he's taking credit, but he didn't do the survey. He just said, I think if you ask people, they'd say this.
We've been doing that survey, asking those questions for like 15 years.
But you actually asked the question.
Yeah, we actually asked the question.
He just has the feeling that they'd be answered.
Look, Jan's great, and he's optimistic.
Right.
And I think if if he was hearing negative stuff from the retailers, I think he'd be on that and or he'd be relating that to us. So I agree. The low unemployment rate. However, I will say our All America survey did show a downshift, right, in the most recent quarter.
They're still not getting paid as athletes. I mean, right? I mean, except in California.
I thank you for that explanation,
Isn't that
Joe.
why?
That is helpful.
They're so bitter.
That is very helpful because they're not. But that would suggest the California respondents would have been more optimistic.
You would
it was
think.
not the case, Joe.
Okay, but that's because it's being challenged.
That would really undercut your theory, which is undercutting my survey. While we're at it, no.
When is the economics fake Nobel Prize coming? Is that coming?
It's sometime after the Nobel Peace Prize, and I hate that day actually because I will be forced to come on television and explain some crazy theories that I don't necessarily understand.
I was looking at the medicine prize, and that's a crazy.
Do you know what they're talking about?
Not specific. I didn't read enough about it, but the way cells, the way to oxygen,
and the way the Nobel Committee writes this stuff, you just can't get it if you do not have some sort of prior.
I'm excited that there's 2 literature prizes coming, so it's like a double.
I didn't see that. Are there 2?
Yeah, because 2018 there was a scandal and they didn't give one out last year, so they're giving 2 out. Which is kind of cool. A double.
And folks, in case you're interested, you may want to write down that date in your calendar because Joe and I will argue as to whether or not.
I'm hoping
literature.
No, economics.
Whether
or not economics is really a prize.
For Robert Hunter and Garcia, maybe because we had Bob Dylan.
We did have Dylan.
Didn't Robert Hunter just die?
Robert Hunter most certainly deserves one.
Let's got a nap here.
I'm going to move on.
I don't think they do it posthumously, do they?
No.
They don't.
You guys, we'll get you.
Joining us now, Barry.
We'll return to this if we want to, since it's our show.
Sure. Okay.
No, go ahead. No, I don't. No, I want to go to Barry Knapp. I want to go to Barry.
You got Melissa angry, Joe.
I want to get her mad. Don't want to.
Barry Knapp, managing partner at Ironsides Macroeconomics, and Scott Wren, senior global equity strategist at Wells Fargo Investment Institute. Barry, I'll start with you. You don't see any of these signs of recession on the horizon. You feel pretty good about where we are.
Reasonably good. I think there's some nuance to this, in as much as, first of all, on the consumption side, the recent numbers have been flattered by the fact that we had a real downshift when the stock market imploded last year. And so this was very similar to what happened in 1987. The second quarter numbers were exceptionally strong. It continued all the way to July because of Prime Day in part. But basically, consumption's going back to trend of 2.5%, 2.75%. The numbers look softer in the third quarter because of how strong they were in the second quarter. The other thing I would add about the labor market is it looks significantly tighter to me. Now, there was a lot of concern about the average hourly earnings series. I don't know why anyone even looks at that one, quite frankly. The headline number's been around since 2006. It's very quirky. The non-supervisory series has been around since the mid-'60s. That's at 3.5%. And what's driving it right now is the retail sector, which is growing. Wages are growing at 4.8 with a 3.4% unemployment rate, which is shocking, right, given the retail apocalypse. And leisure and hospitality wages are growing 4.3. So low end, less skilled is driving those wage gains at the non-supervisory level. So to me, things are looking significantly tighter in the labor market for the first time. A year ago, wages were going up because the labor turnover had increased. Now it looks like it's actually getting tighter. The consumer piece is fine. I would say, though, comforting yourself that the consumer is fine and we can't have a recession is a little bit of a false way of thinking about things, in as much as we've had investment-driven recessions before, 2001 being an obvious case. There's no bubble, but at 49, when Truman got reelected, we had investment just absolutely collapse.
Investment meaning CapEx?
Correct, right? And so that fair deal was actually left of the New Deal, and when he got shockingly reelected, CapEx just collapsed. But it's a shallow, short recession. And I think the important thing to keep in mind there is, let's say we had an investment-driven recession. The median decline in earnings related to a post-war recession is only 13%. The median decline in the stock market is only 20%. The last two were big because bubbles burst. But that's sort of framing our downside. So I think this whole debate about recession is a little bit kind of dubious, because I just don't think downside is that great, even if we had investment completely collapse.
If we were to have an investment-driven recession, what does CapEx need to fall to? I mean, we're looking at about 3% in the third quarter year on year, maybe some negative quarters in 2020. And so does it have to go to negative, or?
Well, it has to broaden to the labor market, right? Okay. It can't just be businesses in 2018 were investing in capital and labor. This year they've cut capital. Labor's still okay. The growth rate slowed from, we originally thought it was 1.9% year on year to 1.3%, so it slowed. But it would have to decelerate further to actually have that permeate and cause a shallow recession. But even then, I suspect it would be quite shallow. So.
Scott, it sounds like you're getting more conservative, that you want to go to neutral, you want to take risk off, you want to go to higher quality in equities as well as fixed income.
We have, Melissa, and you and I have talked quite a bit over the last year or so, and we've been leaning hard. We had been leaning hard towards stocks, towards cyclical sectors for years, but really in a couple of steps this year as the market approached 3,000. Our year-end target's 3030 in the S&P 500. We thought stocks were pretty close to fair value, and really for us, even though we have a constructive outlook, modest growth, modest inflation, really out through 2020, but the negative risks to that outlook have increased, whether largely this trade situation, global growth, or these negotiations going to go. We still have, obviously, Brexit to get through. A lot of debate on the Fed. You mentioned the Kansas City Fed president, what her views were on further rate cuts. So there's a lot of uncertainties here. I think the market is pretty close to fair value, just a little bit below our year-end target, as I mentioned. But, for us, I think right now it was prudent to not lean hard towards stocks. We still like tech. We still like consumer discretionary. We still like financials. But, we're not going to swing for the fences as really, to be honest with you, we had been doing for a number of years.
At the same time, what did you think of last week's price action? I mean, for all the volatility, we ended the week fairly flat. At the end of the day. It was.
I tell you, on Wednesday, on the big down day, that was a trading day. I mean, we came down, and if you were watching the charts, if you were watching the trend line off the December low, you knew there were a lot of stops lined up below 29.40. We ran those stops. We followed through. There was another trend line, a more minor trend line below that at 28.90. And when we hit that, we hit two technical sell stop levels that had big time sell stops all on the same day, and that pushed us down, and we've recovered since then. There wasn't a lot of follow through. I think that was a good technical sign, but certainly as I mentioned, the trigger there was that ISM manufacturing number. Is it going to come in that low again next time? Probably not. Maybe a little overstated if you look at the market numbers, but for us there wasn't a lot of follow through to the downside. You'd have to say that technically, last week was somewhat of a positive. And as I said, when you look forward, fundamentally, I don't think we're in bad shape. It's these uncertainties over trade. Trade discussions, if China and the U.S. walk away, market's going to go down on that.
All right. Scott, thanks. Scott Wren and Barry Knapp.
Thanks, Melissa.
Okay, a lot more on Squawk coming up this morning in just a moment. America's healthcare system is in focus as we head toward the 2020 election. And we've got former Aetna CEO Mark Bertolini, who's going to join us right here to discuss what an Elizabeth Warren presidency could mean for the sector and a lot more. And then later, former NASDAQ chief Bob Greifeld's going to join us. He's going to talk IPO valuations, the state of the markets, and so much more. Squawk returns right after this.
Trading Block is sponsored by Columbia Threadneedle Investments.
Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. And make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
Otto Sergey now checks for better energy deals so you don't have to. Meaning we can all sit back and relax. Can't we, Sergey? Sergey?
Hey? What?
Tell the people that we can sit back and relax.
Oh, we can sit back and relax.
Oh, don't waste energy worrying about energy. Automate it with Otto Sergey. Compare the market. Keep life simple.
Customer preferences determine alerts based on tariff type, payment type, supplier rating, and minimum annual saving of £50.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Catch the latest news as it happens with MSNBC on TuneIn. From American politics to global events, when breaking news hits, you'll never miss a moment again. Search MSNBC on TuneIn to hear the latest.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live, regular season matchups and rivalry games, conference championships and bowl games, the college football playoff.
Throw it. He's got it on stiff arm. End zone. Touchdown.
You can listen to it all for free at home, on campus, or on the road. Hear the excitement and pageantry of college football all season long free on TuneIn. Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every.
And it's a home run.
Single.
And gone.
Game.
And that gone, a home run.
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit.
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone.
Upgrade today.
Welcome back to Squawk Box. What is the stock market telling us about the 2020 election? At this year's Delivering Alpha conference, legendary stock picker Jim Chanos told us which market indicator he says he's paying most attention to.
I don't think the stock market is discounting a win by the left in 2020. You look at things like the for-profit education stocks, for-profit prison stocks, which basically could be impacted by executive order, both positively and negatively. The for-profits were impacted negatively in the Obama administration, certainly. Those stocks, until very recently, were all hitting new highs. They've only very recently begun to roll over.
For more investment ideas from the biggest names in business, visit deliveringalpha.com.
Coming up, the latest CNBC All-America survey showing that investors care more about health care than taxes or the economy when it comes to the 2020 election. What would an Elizabeth Warren presidency mean for the sector? We asked former Aetna CEO Mark Bertolini after this break. Squawk Box will be right back.
This CNBC program is...
At Harefield Hospital's private facilities, we provide short-notice heart and lung appointments whenever you need us, along with advanced diagnostics and pioneering treatments with our leading experts. Whether it's a heart or lung health screening, or to see one of our expert heart and lung consultants, we provide you with specialist private health care, quickly, expertly, and conveniently. Book a private appointment today at Harefield Hospital by visiting rbhh-specialistcare.co.uk.
If you're collecting your prescription, don't assume you can claim it for free. Not all benefits entitle you to free prescriptions. And if you claim when you're not entitled, you could face a penalty charge of up to £100. Thankfully, there's a simple way to find out if you should be paying. Search Check Before You Tick online and use our eligibility checker to find out if your benefits mean you can claim for free. Or you can ask your pharmacy team. So always remember to check before you tick. This was brought to you by the NHS.
Hearing is an underrated miracle. Intimate whispers, the lushness of symphonies, the soothing patter of rain on leaves. If you had that taken away from you, it would be a massive loss for most of us. Almost all of us go every day without really stopping to think about just how important it is to us.
Audible presents The Body, a guide for occupants, written and read by Bill Bryson, including original bonus material exclusively available at Audible. Listen free as part of your 30-day trial, $7.99 a month after 30 days, renews automatically.
The 1304 LNER train, Coach C. Taking aunties with cold hands to nephews with warm cheeks in Edinburgh. Remorseful revellers back to their beds in Leeds. Business mums gliding over the Forth Bridge towards a door in Toddlers in Newcastle. And a band heading to London to our group of strangers in a tiny pub. This is us. These are our journeys. This is our LNER.
The nights have started to draw in. And at DFS, we know that can only mean one thing. Everyone will want to spend more time at home getting nice and cozy. You can't beat it. That's why all our sofas are handmade to order and many are guaranteed to be delivered in time for Christmas. So you can look forward to cozying up this winter, knowing your new sofa won't let you down. DFS.
Hello, Vitality Health Insurance.
Oh, hi. Is it true if I join Vitality, I get de facto 5-star rated cover, can speak to a GP 24/7, get rewarded for staying active with things like Starbucks coffee, get a little sausage dog to live with me, and you can beat my current premium by up to 10%?
Absolutely. Except one of those.
It's the dog, isn't it?
Yeah.
Time to review your health insurance. Just search Vitality Health. Vitality. Positively different. Minimum monthly premiums, terms and conditions apply.
As the 2020 race heats up, healthcare remains a top issue for voters. According to a CNBC survey, the All America survey, health insurance tops trade and taxes as the most important economic issue in the election that's coming up. For a closer look at the healthcare sector, let's welcome Mark Bertolini, a former Aetna chairman and CEO. He is author of Mission Driven Leadership, My Journal as a journey. Yeah, thank you for writing journal in there. I thought it was my journey. I don't know what my journal would be. My journey as a radical capitalist. Was it as a radical capitalist, or is that
Yes, that's right.
wrong too? Okay, good. Anyway.
Thanks, Joe.
You're welcome. Yeah, thank you. Thank you, Greco. So listen, are you surprised that that's the number one concern? And do you really... Is it the number one concern if you were really to drill down on that? And what does it indicate? Since at this point, most people, I think, take for granted their private insurance that they have through their employer, and it's really pretty good. So who are the respondents talking about that are worried about healthcare as an issue, or is it an overall issue in terms of cost?
I don't think it's the insurance. I think it's the cost and the fear of what happens if people get sick. So more than 50%, almost 60% of Americans right now, somewhere in that range, are $400 away from a financial hardship. And the next 20% are $4,000 away from a financial hardship. And when you look at those statistics, that's less than a deductible, or less than a deductible for most people. And so if you see that as a cause, you say, well, what am I going to do if somebody gets sick in my family? How do I think about buying pills that I can't afford? What if I have to go to the doctor? Do I really need to go? And I think that's leading to a lot of fear in people's minds.
Still doesn't seem like that would become... I would still think that, I don't know, that other issues would move ahead of that, unless you read so much about problems with, I don't know, with the Affordable Care Act and the way it's not being supported, I guess, supposedly by the Trump administration.
I think we need to think about health as the opposite of poverty, and poverty is the opposite of health. If you can't afford to put good food on the table, if you can't afford to go, it's too unsafe to go out for a walk at night. Basic Maslow's hierarchy of needs leads to health deterioration and the quality of people's lives deteriorates. So people don't define their health as a disease. I'm a spinal cord injury survivor. Don't talk about it that way. They define their health by what it does to limit the life they want to lead. And when people feel their life closing in around them and they can't afford the things that they need to live the life they want to lead, health is one of those big things.
Okay, I understand the health, but the having only $400 for an emergency seems more that it's having only $400, not the health aspect of things, but maybe income inequality or not making enough money or being stuck in a lower quintile of...
I think it manifests itself as health.
Apparently it does.
Right, it all does. And health isn't something you plan, it happens, right?
Right.
But so normally only among going to happen.
Young people think they're invincible. They don't even want insurance half the time.
But young people aren't the problem.
Yeah, you're talking about the people that are worried.
I'm talking about you and me.
Right. So speak to what happens if we set this segment up in the tease before. If Elizabeth Warren wins the presidency, what happens?
Well, let's talk about single payer or Medicare for all. If you look at how Medicare is operated today, and Medicaid for that matter, private insurance companies run the business. The government does not run it. And so when I ask people, what do they think about single payer? They'll point out to the UK or Canada as places where they have that. And That's not what we're talking about. Because we're going to talk about socialized medicine, physicians, hospitals, and insurance. That's what Canada and the UK are. Then we have a system like that in the United States. It's called the VA. Doesn't work really well. So what we really are talking about is how do we pay for what is a broken system today? So we conflate financing and investing. What is the investment we're making? How is it rendered? How are we taking care of people? That's where we need the urgency, because if you finance a bad investment, no matter how you finance it, it's a bad investment. And single payer Medicare for all is just refinancing a bad investment.
And so you don't think it's how it's paid for so much as what you're getting on the other end?
Definitely. We're holding on to the wrong end of the stick. We're all looking at it, what we can control in the government and insurance companies, drug companies. It's really from the consumer standpoint what they need.
But do you think that if Elizabeth Warren does get into office, she'd be successful in actually turning the country and the government towards a true single-payer system? Do you think that's even plausible unto itself?
I don't think it's plausible because the Democratic Party doesn't support that in total. When you look at polling Democrats,
right,
they are in a place where they don't believe that single-payer is the way to go. And if you look at Congress and its inability to act on virtually anything these days, let alone doing something as massive as single payer, if Elizabeth Warren were in office as President Warren, she would face the same gridlock that President Trump.
But she wants to think. I mean, you say Democrats don't, so you're just talking about the fragmentation of the Democratic Party. She does. She wants that, right?
She wants that, but how are you going to get anything done in this Congress today? Even within each party, there are fractions that don't allow her to make that move.
Is there something that you think could get done that would actually be a positive step forward?
Yeah, I think Michael Bennett, who's a really distant candidate in all of this, and I think a really great guy, has a really good plan called Medicare X. Don't love the name, but I think the idea of Medicare for all more, which was what candidate Clinton talked about when she ran for office in the last election. And I think it would have been better than when we did Obamacare. If we would have just done Medicaid expansion and we would have means-tested Medicare for people under 65 down to some age, let's say 50, and said you can buy into the Medicare program based on your ability to pay, we would have done as good as or better than Obamacare, a lot cheaper.
Why would the outcome be any better than what you described earlier for Medicare?
Because those two financing systems work really well.
Yeah, but the care delivery wouldn't be any better than it is.
I think the Medicare, well, let's talk about the president's order last week. He put out an order that said Medicare Advantage should have more services available, including social determinants. And in that order is a lot of really good language why Medicare Advantage can save the country a lot of money. I think it's a huge opportunity to fix the safety net around Medicare. Now, we have to put it into regulation. It needs to be done by next June in order to price it. And if it doesn't get done by next June, then it's into the next election.
So what's ailing the whole sector if none of this is going to happen? All these companies should be in a great position.
What happened in 2011, in 2012, in 2013, when the ACA was being put into effect and all of Wall Street said, you know what, bad industry, they're going to be put out of business, let's sell them short or let's stay away. The same thing's happening now with a lot of the rhetoric going on around healthcare. And I think that's it's just going to have to pass until Wall Street sees it.
So they're wrong?
It sounds like it's a great buying opportunity then.
If you believe in the long-run resilience of the industry, which it does have, quite frankly, I think that this too shall pass.
Okay, but now that you're not in the business and can speak unencumbered, if you will,
yeah.
When people point at the boogeyman being the insurance companies or the boogeyman being the pharmaceutical companies or the hospital chains these days, right?
Middlemen.
Mm-hmm.
Do you now sit or can you sit with some distance or perspective and say, actually, yeah, the profits in that industry are too much, dare I say, in one or another?
I think the profits are where customers don't see value. So if we stand on the consumer side of it and say, how can you help me live the life I want to lead? How can you help me assure that I'll have a healthy